has just declared numbers. Numbers are not looking that great, or actually we can say they are slightly mixed set in terms of numbers. 0.3% higher for Tata Motors now. Profit numbers 2236 as far as consolidated profit is concerned. That's the number that we are looking at. It's slightly on the lower side, that's what I would say. But the key thing is that about the JLR margins. So what I can see in terms of JLR margins is that margins are about 12.3 odd percent. It was expected to be close to about 14.5%. So there is that number that we are looking at. The operating performance in the quarter reflects the overall higher wholesales offset by adverse forex impact of about 207 million and revaluation of 84 million. Mainly euro payable resulting into a depreciation of pound following the Brexit. EBITDA margins excluding the forex revaluation was around the 14% sort of a number. Further, the operating profits for the quarter was also impacted by lower local market incentives as compared to corresponding quarter of the last year. So there is a one-off. I feel that that's the one-off number that we are looking at. There was an initial knee-jerk reaction, but now reading this entire thing, you get a sense that they may be there is just a one-off as far as these numbers are concerned. Nothing much apart from that. As far as the standalone business is concerned, so if I look at the standalone business, the MHCV segment grew by about 7.8%, LCV grew by 11.6%. Passenger vehicle segment grew by 6.3%. The car segment growth of 15.1% backed by strong response to the recently launched Tiago. Strong growth in all the segment along with the cost reduction and other margins initiative led by improvement of 60 basis points YOY on a standalone basis. Overall, you just get a sense that yes, there is that one-off into these numbers, but apart from that, the numbers are not particularly looking that bad. So 493, there is no reason, of course, to cheer into these numbers, but at the same time, you would not see any major sort of movement coming in as well. Mayuresh Joshi is now with us. Mayuresh, first reaction, JLR margins are below, but I believe there is a one-off forex impact.
Oh, it looks like apparently, and I think that one-off forex impact would also be because of the GDP fluctuation that we saw, and again I think the comparison that you'll probably do with US dollar denominated loans. So largely I think if you exclude that forex impact, my own sense is that the numbers looking pretty reasonable. And again on the domestic front, I think the expectations largely being met because the operating leverage was expected to play out on the standalone balance sheet, specifically on the domestic business. So largely my sense is that the numbers are looking quite reasonable, but one really needs to dwell into numbers on greater detail to see whether this effect is one-off and the management commentary thereof.
Right, one has to take that one-off into account.
Again, largely I think one really does not know the fallout of Brexit over the next few quarters as well. So the management commentary specifically on the forex component needs to be clearly understood, and distinction has to be done possibly in terms of what kind of an impact on both counts in terms of how the GBP will respond and what also probably will happen to the dollar, because there are also FCNR redemptions happening this month. So again I think you're probably looking at how the rupee dollar moves, how the dollar GBP moves, and how the GBP rupee moves. So largely I think the forex impact has to be understood in greater detail from the management.
You think the more focus would be on what the management says about China and other probably key markets?
Well, it would be, and again I think the kind of numbers that they posted on the JLR front specifically, both wholesale and retail, have been quite reasonable. So my own sense is that the Chinese markets commentary would be essential, but again I think the general commentary on how they're probably looking at JL and JLR sales, the kind of platforms that they've launched, the kind of response that they've received, the realization impact, and again I think the forex impact, I think all these 3-4 factors will be extremely crucial from the management con call.
Right. Would you be a buyer into Tata Motors looking at these numbers and at the current level?
So you've known my view of the stock, Pankaj. I think I've always liked Tata Motors. But again, I think I'll be watching out for all these 4 numbers because the stock has moved substantially over the past few weeks and months. So again, I think I remain optimistic on the story in a long-term basis. But largely, I think a clear perspective on these 3 angles that we talk about would give further clarity on changing our estimates or probably looking at estimates in terms of revising our numbers going forward.
Right. As far as the management commentary, when they start to speak around 5 p.m., what would you eye out for? Mayuresh, what would you eye out for when the management starts to speak? I think we have lost the connection with Mayuresh. We'll just get back to that thing. But these numbers are not as bad as you thought they are on the first take. There is an exceptional gain of 490 odd crores over there. But even if you adjust for that, I think the JLR numbers are looking decent. They are broadly good and broad. Okay, Devin Choksi is now with us. Devin, first reaction, there is an exceptional item, so you would just adjust for that?
Pankaj, I have broadly gone through the results, and yes, I think there is an exceptional item, but at the same time, there is some amount of impact on the EBITDA margins also. So I think carefully needs to analyze that particular aspect. Overall, I think the result appears to be on expected lines, and I think it is appearing to be more or less satisfactory result, as I would call it.
Right. What would you eye out for once now we have these numbers? We have things now. The management would start to speak. What would you eye out for?
Well, according to me, I think most important part, because I think on a quarterly basis, when we see the company's results, we definitely want to see that if at all there are any items which are on a negative side. Here we don't see any negative side of vertical items in the results. Now, next thing to watch out here from here on would be the progress of the new models and how exactly they are cornering the market share in the JLR portfolio. So certainly I think that will be the next thing to watch out for. Plus, I think another thing which is definitely, I think, in the offing and to be watched out for would be whether they are having some kind of a strategy in place to go green as far as I think the new vehicle launches are concerned in the next 3 to 5 years' time. If that clarity is coming up from the management side, I think that would help. In between, I think I have basically studied the strategy of JLR. I think they have started focusing on some of the electric vehicles, and they are likely to come up with the launch somewhere in 2019-20. So I think a roadmap on that aspect could possibly help understand the subject better, the company better.
Whenever we look at JLR or rather Tata Motors, in the last few years or quarters, there has been an exceptional item. So one should just look at them on a yearly basis to give a better sense?
I would think so, because I think overall, if you look at the company from the yearly point of view, it makes more sense than looking at on a quarterly basis. I would imagine that I think the business of the company has to be seen over a period of time, because in some quarters when the new launches have taken place, there would be exceptional items even on the cost side. So certainly I think they have to be seen from that perspective, and not necessarily that in subsequent quarters they would repeat. They may probably, the cost factor would come down. So to an extent, I think one has to keep an eye on that. How much it is in the current working and all, I'm not too sure, because I'm yet to see the full detail.
Right, but overall, irrespective of the numbers, you're positive on Tata Motors with the brand that they have, the sort of efforts that Tatas have taken in the last 6-7 years?
Yes, absolutely. In fact, I think the console numbers could look much better going forward, because India operations, which have up till now struggled big time because of the lack of movement in the commercial vehicle segment, is now showing traction and is now showing some signs of improvement. Though still in current commercial vehicle scenario, I think you still have relatively lesser offtakes. But I guess I think in the second half of the year, with the project commissioning, many of the commercial vehicle businesses or the companies would start showing robust numbers. So from a consideration point of view, I think it should be seen company is growing going forward. In fact, I think I believe that JLR continues to do well because of the newer launches. And the Indian company also, the Indian arm also could, I think, show better performance with the commercial vehicle demand improving.
Right, Devin. Thank you so much for explaining us about the numbers. Tata Motors is now up about 1.9%. I think the markets have digested the numbers. On that note, we are taking a break. More analysis on Tata Motors numbers coming on the other side. Nifty is looking flat, 18 odd points, but probably the stock of the moment is Tata Motors. It's at the day's high. Let's just pull up Tata Motors and what's really happening over there. So it's up close to about 3.5, 510, 511 for Tata Motors right now. 3% higher, as we told you. JLR, of course, had certain one-offs over there. Otherwise, these numbers were looking broadly fine. They were looking broadly good. And then you have seen this sort of a reaction coming in. We were talking to Mayuresh. He's still with us. as well as we have Sahil Kapoor now joining us. Sahil, any view on Tata Motors? I know you don't look at fundamentals, but if you could just tell us on a technical view about what level, or at, say, if we close at what level, would you be bullish on Tata Motors?
See, generally we have a bullish outlook on Tata Motors, and on charts I think there is some amount of resistance happening between 515 and 520. I think once that level is overcome, the next target should be closer to 560 to 575 range. So overall the trend appears to be quite strong, and if the stock is seeing a good positive reaction and if it takes out resistance levels, I think you should continue to hold long positions, or possibly create more long positions here.
Right. At what level should you create long positions?
So I think the perfect range right now appears to be between 500 and 510 with a stop loss below 419. Plus, if the stock were to scale 520 levels, I think there will be another bout of upside that will play in. So this range between 500 and 510 appears to be a good entry point.
Right. Mayuresh, we already spoke to you about Tata Motors. But just, for our viewers, Tata Motors versus DVR, you would continue to prefer DVR, or because of volumes, you would look at Tata Motors?
No, again, I think the performance of DVR will depend on how the core performance of Tata Motors has been. And again, the discounting factor probably is narrowing down. So largely, I think, as I was mentioning earlier, I think the operational performance is expected to remain stable and improve over the next few quarters with new platforms coming through. And the discounting factor between the DVR and the parent Tata Motors should narrow down to more reasonable levels. So my own sense is that the moment that is probably reflected in DVR is more or less to do with how the parent performs, and we expect the parent to perform exceedingly well for the next 2 to 3 years. So again, I think DVR should perform accordingly.
Right. What about the India business? How would you look at that? We have seen some recovery over there. Tiago, they managed to raise prices really after a long time. But overall, what's the sense that you get?
No, again, I think even on the domestic front, still expecting a few launches to come through over the next few quarters. And again, I think the competitive pressures on the domestic scene are intensifying. So again, I think it will be interesting to note how the volume growth will happen specifically on the PV side of the business. The CV side might just moderate for the entire industry as a whole for the next 1 to 2 months. But largely, again, I think the LCV business, which has been a laggard for the overall industry as a whole, should start seeing meaningful pickup Q3, Q4 onwards. And even on the MHCV front, I think the discounting level should slowly and steadily start coming down for the industry as a whole. So I think MHCV should start picking up over the next couple of quarters. New launches on the PV side should hold it in good stead. So I'm expecting reasonable volume growth to probably go through on the domestic business for Tata Motors, PV plus MHCV, including LCV. And again, realizations should start improving over the next few quarters.
Sahil, how would you look at Tata Motors versus Maruti? Can these two charts be compared, or both of them are positive but in their own different respective directions?
I think largely Maruti is a much stronger chart compared to Tata Motors, but if you were to compare a risk reward analysis from current levels, I think Tata Motors offers better opportunity. Maruti appears to be a little overbought, so there could be a series of consolidating sessions for Maruti. So overall, Tata Motors appears to be a much stronger risk reward bet on the long side from current levels.
Right. Sahil, any view on Tata Motors DVR as well? Is that a similar chart? Now it's a part of Nifty, it's attracting decent volumes. Any view, or it's similar to Tata Motors and you should look at the main share and then decide on Tata Motors DVR?
I think the momentum has been quite different in Tata Motors DVR, and the volatility aspect is also a little different. So you cannot actually trade Tata Motors DVR looking solely at how Tata Motors is moving, because the premium and discount has been quite wavering. So, but my guess is that if you are a player who's playing for a medium term to a little slightly longish view, and you are inherently doing a long or zero strategy, then Tata Motor DVR suits you better. Because of the kind of upside momentum that it sees. So largely from a levels perspective, I think 310 to 312 will be an ideal entry for the DVR script, and that will give some amount of cushion in terms of keeping a stop loss below 300 and looking for targets in excess of 345 to 350.
Right. As far as something, if you just look at the top gainers list today, Sahil, at least from the top 200 space, some of them may not be a part of F&O, but if we just look, a Group Finance is up 10%. Any news flow that you can pick up over there? Is it because of, it could be because of, rates or the news flow that we have seen on the bonds, but Group Finance, anything that you can pick up?
So in terms of news flow, though, I'm not aware about what kind of new additions have happened. But overall, I think most of the housing finance company were, in a little bit of a range for a few sessions. But I think the momentum has picked up in quite few of them. For instance, we saw a big breakout in LIC Housing Finance last week, and I think some of the companies are seeing breakouts in the current week. So overall, the trend continues to remain quite strong in this subgroup of the industry, and I think this trend will continue for a while based on the momentum that we've seen.
Right. Any view on IGL? I mean, it started to see volumes in the last few trading sessions, but any view on that name? It has a decent history.
Yes, I think overall IGL, we expect the stock to move towards 850 over a period of time. The kind of momentum and volume upticks that we've seen in IGL, specifically once it broke past 750, 760 levels, I think it's still, ideally is a buy strategy. The entry levels are not very far off, closer to 775 to 774. I think that will give a good entry level for IGL. So overall on charts, it's a robust, technical pattern for an uptrend. So we continue to like this stock, and we are recommending long positions on IGL.
Right. Mayuresh, what's your view on IGL, especially after the results?
Results have been extremely encouraging, Pankaj, and again, if you look at the core performance on an EBITDA to SCF basis, it actually came at 6.53 compared to 5.3, 5.4 for the entire part of FY16. Secondly, I think both in terms of CNG and PNG volume growth, my own expectations is higher single teens coming through probably for the next 2 years, 3 years to say the least. Third, I think with domestic gas prices coming down from 4.2 MMBTU to around 3.4 MMBTU, the cost of inputs have basically gone down, which will effectively mean that the margins probably should sustain and expand going forward. And fourth, probably, I think, is the kind of cash flows that we are expected to see over the next 2 or 3 years. The business model looks quite robust. So again, I think largely keeping a positive view on IG.
Right. Mayuresh, if we just look at Group Finance, it's up 10%. Anything that you can pick up, or it's just a name which continues to do well, but maybe in patches, and it's now just into that patch where it can just grow 10-15%?
Well, largely, again, I think housing finance companies are going on the premise that the retail advances growth, specifically on the mortgages side, should increase at a pace of around 20-21 odd %, which will lead to a earnings CAGR of around 20-21% respectively for the entire industry as a whole. Now, being stock specific here, I think there are a few companies who have exposures towards developer loans. They've also got exposure towards loans against properties. But largely, I think the asset quality has been extremely stable even in turbulent times. So as asset quality stress keeps on coming down, as the advances growth improves at a very decent pace, and the kind of tapping that they're doing on the NCD market, I think we're expecting 100 bips reduction in borrowing costs that we perceived at least a couple of months back, and that is turning true. So largely, I think the spreads NIM should be maintained. Largely, the top line growth will go at a very decent pace, which will trickle down to the bottom line. And again, valuations are not too expensive at this point of time even. So largely, I think housing finance companies expected to perform well on both the advances side as well as on the bottom line. So largely, I think keeping a positive view on HFCs.
No point at looking at valuations like this company. It will always trade at very expensive valuations versus markets.
Oh yes, it would, and again I think that's historically proven now. So there are a few companies that will always trade at premium valuations, and again I think the justification will come in terms of whether they demand these valuations going forward. But every quarter I think certain companies which demand peak or premium valuations do perform on expected lines. There is no point of derating these companies. The re-rating might not happen because of the base that they are working, but again I think the valuations probably remain at elevated levels and would continue to remain so for companies which are having a qualitative pedigree.
Right, Mayuresh, thank you so much for taking out time for us. Sahil, I have a few more questions before we end. Any view on Hindalco, a percent higher, 155?
So largely we've been